Good morning, everyone. This is Dennis Woolman with the Active Trend Traders. Welcome to the Friday edition of the How to Make Money Trading Stocks webinar. I want to welcome everybody from around the country and overseas. We are ready to jump in. Michael Bishop is not with us today. He is really taken advantage of his holiday time this year. He is currently apparently bicycling or something through France, and so you know, it's tough work if you can get it. I am back on the mainland. My wife and I are staying with our son up in Novato, California. Mike Traeger may or may not join us today, but Mike is enjoying the warm weather of Dallas, Texas. Last weekend we were at my wife's twin sister's wedding down in Bakersfield, California, and it was hotter than heck, about 107 on the day they got married. And they got married in a little chapel that, Melanie got married in a little chapel that had no air conditioning. So yeah, we were sweating our you-know-what's off. Anyway, all the materials that we do present here are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Here's Mike's. If Michael were with us, this is his disclaimer. And I always like to remind people, I think that it's one of the things that Active Trend Trading for the premium members and trial members and the regular members really enjoy is basically being able to click in, and we always have a good technical analysis or psychology type training every Wednesday at 6:30 Pacific time. And this week, last week we talked about looking for some symmetry in both time and price action. And if you have not seen that training session, you can find it on the website underneath the training webinars tabs. And that's again for the premium members, the basic members, and the members who are early warning alert members. There we go. And so this week we're going to be talking about finding strong stocks and how to use the stock checkup feature of Investor Business Daily, which I find a very good place to go and just kind of like, okay, see if a stock really is worth the effort of investing. I already start with a list of stocks that are basically on one of the elite lists that IBD puts out, because I don't personally like to do the fundamental analysis, but I do like to trade fundamentally sound stocks, and that's where I use the IBD stock checkup to make sure that stocks meet a certain criteria. So taking a look at this week over last week, of course, I was in the process of driving to Bakersfield, therefore didn't do a show last Friday. Part of the questions, we asked 2 weeks ago, it appears as if the market is continuing to defy gravity, which it is, and that's okay. It is in a nice confirmed uptrend. And at this point has not yet given us a really good solid entry point to trade it to the upside. But as I look at this, okay, the NASDAQ and the Russell this week have been the strongest of the three indexes. Big name stocks have reported with various levels of success. We know that Netflix got whacked when it reported. Facebook reported this week and jumped up significantly, did a breakout, but then fell back into its price range so that it finished the day up yesterday, only about $1.25. And so not a lot of real strength. We'll take a look at both Amazon and Google as they reported today, and then of course those of you who trade along with us on the strategy number 3, Tesla reports next Thursday, next Wednesday, August 3rd, after market closes, and I sent out an alert to all the people doing the special trades with us with the options today, just to say I will be waiting until next probably Tuesday or Wednesday, when the implied volatility on the the weekly options for Tesla grows a lot. So SPX, you know, one could make an argument that SPX right now is putting in a bull flag. You know, it made a slight attempt this morning to break out of that. It did bust up through the highs of the little channel, the little trading range that it's in. NASDAQ 100 this morning, at least intraday, reached last year's high. Russell, which has also been on, kind of on a tear here lately. Big question on Russell. It's kind of further extended than the other indexes, and so is it time for it to try to revert back to its mean? We'll see. As we said, the big, some of the big name stocks, Apple reported, Netflix, Google, Facebook, and if I said Amazon and Google reported this week, Netflix last week, and so earnings season is still in the middle of earnings season, so we can have some impact from that. There is negative divergence on the charts of the indexes, but yet no market reaction to this negative divergence. The price action on the stocks continues to push it over into the overvalued area with regarding, how it's doing earnings-wise, but it's getting more overvalued. And at some point, as Mike and I have discussed in the past, the Fed is going to, appears to be doing all it can to keep the market up until at least after the election. And so if their goal is to keep the market from falling, they're doing a great job at that. And we can get into the discussion of the politics of why they're doing it, but it really doesn't matter why. All it matters is that they're doing it. Will the chickens eventually come home to roost? Yeah, probably. But at this point, they're still out there flying around the barnyard without going into the coop. So, okay, here's where we were 2 weeks ago. We had popped up above the 80. This is the percentage of stocks primarily of the NYSE that are above their 20-day moving average. I put out in last night's update, somebody during training on Wednesday night had asked the question, well, what about just the stocks on like the S&P, the NASDAQ, and the Russell, of course, is a non-weighted index, which this is more reflective of. So here's where we were 2 weeks ago. Here's where we are today. As you can see, what's interesting is when I checked this morning, it turns out that the stocks above their 20-day moving average on the S&P had actually slipped to around the same level, 60-65%, which still means that 35% of the stocks are below that. The question is will that eventually, if it continues to slide, if this line continues to slide, gets down here towards the 50 level, will that in turn pull down the S&P, or in this case is the reflection of the spiders up here reaching new highs? Will it pull it down, or will the S&P continue just to drive sideways? At this point, we don't know. But we are lingering up here in this area, and we've lingered up here now for almost 2 weeks within the same little tight trading zone. And so what I'm looking for, like I said, I would love to see a nice orderly pullback in order to get into some long positions. And at this point, all we have is just basically a move sideways in place. Looking at a longer term chart, the percentage of stocks on the NYSE above their 200-day moving average. As we can see, we have more and more stocks being added to the list that are above the 200-day moving average. We're pushing up here towards the 70 level. Again, the spiders in this reflection we're up about 217.28 this morning, which relates to about a 2175 level on the S&P. And as I said, we took that out. So we're sitting at 6904 for the percentage of stocks. This again is a monthly chart, and it's just continuing to try to push higher. At some point, we will get some kind of a pullback, but it's got multiple levels of really good support to support it on the way down. And we'll see how far it will drop in order for us to potentially pick up something if we're anticipating we're going to push higher into the end of the year. The one point that I made a couple of weeks ago was that we're moving. This past week was kind of the week that was a mark of was a point of demarcation, because in the last 5 years, the week that ends July 29th was the beginning of either a significant correction or at least a strong pullback in the S&P. This year, maybe one of those outliers where it did it 5 years in a row, but this year it has not done that. We have not seen the strong pullback or even a weak pullback as of yet. So here's where we were sitting about 9:30 this morning. The Dow is up a little bit over 5.85, down slightly from 2 weeks ago. S&P up from 2 weeks ago. The NASDAQ up and is starting to catch up with the S&P for the year. And then the Russell is really starting to almost outperform. The longer the Fed waits to raise interest rates, the better the Russell will perform, because most of the small cap stocks are much more interest rate sensitive than some of the larger big caps that fill into the NASDAQ Composite, NASDAQ 100, and the S&P. As we can see, the NASDAQ getting really close to popping, hitting against last year's high. It actually hit that a little bit earlier today, intraday, and then fell back. Same thing for the composite. The Russell's still about 5.6% away from the its all-time high and the high from last year. Okay, let's take a look at the charts. There we go. As I'm going to say, I have been looking, folks, at this particular the S&P has been driving across here in this little price range from here down to, it popped as low as 2155, but it's kind of bounced up where it's got a really strong level of support here at the 2160 level. Earlier I took the measurement of this, and from the 2160 up to the highs is only about a, it's a little bit, let's see if I can get that up. There we go. Get it up there. There we go. About 0.8%. And so we have been stuck in this particular trading range now for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. So a little bit over a week and a half. And at this point, this could be construed as either just a bull flag, a horizontal big bull flag, and oftentimes those horizontal bull flags, just for information, can be actually a stronger indication that if we pop up the top of it, we're going to go on to a more significant run. Earlier we had projected, and here's those lines were there when I drew it. There we go. Earlier we'd done a projection from the breakout from here to here, and it actually put prices, up in the above 2250 for the year, and we can do that extension right now. If we take this low here, let me get that, this low here, to these highs here where it finally did its breakout, and then move that up to the breakout level, which is about there. As you can see, that puts us up about the 2245 to 2250 level. Let me remove that. And for those of you who are in on Wednesday's training, we talked about this a little bit from the, there we go. You can got a couple of points we can take from this swing high to this swing low to give us a projection. And as you can see, you know, if we pop above the 161.8 extension, then the 200% will put us up there at that 2235 to 2550. If we take that same extension from this swing high down to this area, oops, there we go. As you can see, that's it. There we go. That goes up, pulls us all the way up to the 22.5 level that we were speaking about earlier. With each one of these little posits or groupings of fib lines being areas where we could anticipate running into some level of resistance. And right now we're sitting right slightly below the, or slightly above the 138.2. We're probably close to about the 150, 150 extension on the fibs. There we go. And here is part of the divergence that we're talking about. Prices pushing to, you know, to a new high. However, our true strength has rolled over and has been falling, but the momentum has also been falling off. We can take that one of two ways. Either, you know, one is that yes, it is a negative divergence, but as you can see from the momentum here, it's been a, you know, working off an overbought, you know, condition, and now it appears as if the momentum wants to bounce here close to the zero line and perhaps start to move back up. Where we start to look for, you know, situations where, you know, we could be getting some kind, you know, a stronger bit of a pullback would be where if we went ahead and we tested a little higher, this, and then put in a bearish type of reversal signal, and the TSI and or the momentum failed to get, you know, start pushing much higher, and then that would be a stronger case for negative divergence. What we're looking at on the weekly chart on the S&P, we're looking at, yes, we are pressing against all-time high. Actually pushed up this morning and made a new all-time high intraday. The true strength on the weekly chart is looking, you know, it's continuing to move higher. It is approaching the plus 50 level, and the plus 50 tends to be an area where the price action will turn around and or at least stall. The negative divergence is very much more evident on the weekly chart, but again, the negative divergence can happen. Yet at this point, we are not seeing, you know, a significant level of selling. This would be considered a hanging man on a weekly chart, and as we learned a couple of weeks ago, a hanging man more often than not turns out to be a continuation pattern rather than a bearish reversal signal. NDX. Okay, let's get rid of that. Remove, I want to do it from, I'm going to do the extensions from here down to here to see where we're looking at. And this week on the NASDAQ, it has pushed through the 1382 and is pushing harder up into this 1618. It too this morning came up and took out last year's high, as we see up here at the 47.40 level, actually 47.39.75. Took that out this morning and is starting to fall back a little bit. At this point, no signals on a daily chart that, hey, we're ready to sell off. Yes, true strength indicator is overextended, and the momentum is showing that it is, has some negative divergence. Same thing over here. Weekly wise, price actions could continue to move up. And this has been one heck of a move over the last 4 weeks, 5 weeks. From this area here, it has moved just to date. Get a price on this, is from here, from the low a couple of weeks ago, or about a month ago, up to here, about 13%, which is a significant, fast move to the upside. And at this point, as I say, until we get some kind of a candle over here that's telling us that, okay, I am really slowing down this time, it's a play to the upside. Gary, it shouldn't, Gary asked the question, is the momentum different on the QQQ? And that's a great question. It shouldn't be that much different. And so here's the Qs, and as you can see, very similar over here on the daily chart, and also very similar over here on the weekly chart. It's basically, following a very similar path. The Qs are up into its, upper Keltner range, can push through, but what we like to see, once it hits that upper Keltner range, and if we close above it, then we're looking for those pullbacks to the 8 or the 20-week moving average. And let's go back to the NDX. And so as you can see over here, very, very, very similar. There we go. Very similar action with the NASDAQ and the Qs as far as their indicators go. That's one thing that Mike does, is Mike will trade. When he does his trading, he basically bases his trades off the indexes themselves and then takes whatever price the individual ETF is providing at that point. And that works. I trade just a little bit different. I'll just go ahead and take my signals off the index ETFs and even the leveraged index ETFs. And does it make a huge difference? And what we found that no, it really doesn't. Russell, as we saw earlier, okay, Russell has in fact pushed on up into a remember last night I talked about this 1225 level is a strong level of resistance because it coincides with these lows and where it touched before last year, going to last year, it found support there, and then it turned around and became resistance once prices began to fall. And this is what I was talking about on the weekly chart. The Russell is well extended away from its moving averages. It's at the top of a Keltner channel, and so one would anticipate once we hit that upper Keltner channel that we would get some kind of a pullback. We expand the Russell on a weekly basis. Let's just take a look, longer term on this. And as you can see, it can get into a situation where it will ride that Keltner channel all the way up, but you're looking for those pullbacks to either the 8-week moving average and or the 20, and those are your periods where, okay, once those happen, we want to go ahead, and if we get a bounce off it, that would be a planned trade for the Russell. And as we can see over here, that hasn't quite happened yet. We got the one touch here, got the real nice pullback, and then a rebound. Excuse my voice. Sounds like it's going a little bit. Okay. One other chart I want to really take a real quick look at, a couple of other charts, is one, the NYA, which corresponds to the NASDAQ, not the NASDAQ, excuse me, the NYSE. And as we can see here, the NYSE, like the other indexes, is kind of just moving sideways. It has made a little bit of a nice move today, but got back up into resistance and has not pushed through. Similar type thing going on here with the momentum and also on the weekly chart. The other one I want to take a real quick look at is VIX. And as you can see, the VIX is at, it's basically at its past lows, and it's working in this channel across here. I'm going to roll over to a weekly monthly chart on this. There we go. And this is the monthly chart. And again, it's down towards, where there is basically very little fear in the marketplace. And I think we saw that. Yeah, Joe, you had a question? Okay, I think what we're seeing is one of the things that I found kind of interesting. If you are Joe asked a question, where are the Keltner channel sets at? They're within the studies. If you're trading with the Thinkorswim platform. Okay, do edit studies. They're over here under, if you don't mind me stopping real quick on this, right there, Keltners. And the way I set my Keltners up is I set them up right here. I set them up with a factor of 2, which equates to 2 ATRs. I use the 20 period exponential moving average based on the open, high, low, close divided by 4, and then it will paint those upper and lower bands. And then you can go over here and play with the upper and lower bands, paint them any color you want them to be, and so that's kind of fun. And I'll cancel that. Okay, so that's where I get the Keltners, and as you can see, as I was saying, the VIX is extremely low, and also the reaction to the Fed was basically almost a non-reaction. It was almost like as if the traders out there were just saying, okay, so the trade's not, so the Fed's not going to raise rates. That's what we expected. So no huge reaction. Today the GDP came out. It came out at I think about 1.5, 1.25, but well under expectations. Do you know that we will have now gone almost 8 years without having a so-called recovery, without ever having a GDP that went over 3%, which has been the mark of many others of our economic recoveries. So that's where people come out and say this economic recovery, this latest one, has been basically fairly moot or muted. And so, but at the same time, there's not a lot of fear out there. So a lot of people are really trusting that the Fed and the other global central banks know what they're doing, and they're trusting them. I started watching. How many have watched the movie The Big Short? Anybody seen The Big Short? It was a movie about a guy who recognized the issues that were going on back in 2005, 2006 with the housing industry and how they were basically putting together these, and bundling and the tranches of different types of housing. And he's and I don't know how, they say it's a true story or based on a true story. But he recognized that that was going on, and he started basically, he went to the banks and asked them to build an entity. It was those short credit swaps that they put together just for this guy. And at one time he had over $1 billion invested in it because he was going and doing $100 million at a time with all the different banks. And anyway, interesting story. But again, at that time, and all the banks were laughing at him, saying that the housing industry has never crashed, so why should we think that it will crash this time? And they were literally laughing their butts off that he was doing that, with the thought being, you're crazy. And he saw something that they didn't, and sure enough, it paid off for him. They say it paid off about 10 to 1. I don't know how he took his profits on it, but very interesting story. And I think kind of we can paint a similar picture here. We can paint a similar picture here to say, prices or the market is overvalued to almost historic levels. Yeah, he who laughs last best. At some point, will things start catching up? And but I found it very intriguing that this guy who initially default credit swaps were what they were called, and what he did was he had to agree basically to pay them interest on this, on the margin, on 1.5 billion, 1.2 or 1.5 billion dollars, and wait about a year before the market crashed. And that's really having some conviction. My pucker factor would have been too tight for something like that, I think, and I would have went, whoa. But he had to continue to pay interest on this, as his positions were actually going against him part of the time, until it finally reversed and went the direction he wanted to go. So Joe says, he who laughs last laughs best. Yeah. So, okay, but I wanted to kind of just highlight that on this weekend section. We'll be coming back and looking at a couple of other stocks here shortly. So I'll just set it up with Tesla as we move forward. Okay. So path of least resistance. On the S&P, hey, other than the resistance it's made here recently and the Fibonacci's, the path of least resistance still remains basically kind of up on the S&P. Or sideways within a slight trading range. We've had nothing to tell us that the path of least resistance would be down yet. We're above all the moving averages, and we're bouncing off of them, and so I think this is the same case with the Russell and the NASDAQ, although it does have some overhead resistance that it has kind of fallen back from today. Especially the NASDAQ has fallen back from its resistance at last year's highs. Okay. As I shared with you, with the guys on Wednesday night, I had put a trailing stop in on the gold trade that we were working on, and I actually fat-fingered one of them, and I'd split the 6 contracts we had left on that spread, put in a stop loss. Was supposed to be, if it fell below $2.50 for the spread, it would pick us up, and I put in if it was above $2.50, and so it took me out of 3 of my contracts immediately, which helped us to improve and increase that for the year. We also entered a trade this week in WOR and my objective through the rest of the year is to construct and get our strategy 1, which is our portfolio building, get it up to speed where it comes in and matches how we've been doing with the other entities, especially the strategy 3 and strategy 2. Will it, catch up with strategy 3, strategy 2? I don't know, but there are some good trades out there that we're going to be capturing moving forward. I think the training we've done over the last several weeks in building a solid, kind of putting the polish on the existing system for how to work it will be very good. Cumulative closed trades are up 19.6%. Strategy number 3 up 66. Strategy number 2 up 27 for the year, and down about 2% on strategy number 1. This is strategy number 3. I like to highlight this. This is the first half of it. This is the one we put in place in September of last year. What I'll be doing is, as you can see, we continue to gain on a weekly basis. And as soon as this number here gets to 100%, it will mean that on this trade, now this includes the value of the 2 options we're long in, the 2 leap options. As soon as this number here gets to 100%, it means that since September of last year, we have generated a gain that paid for the initial investment, $9,000, and we will have added another $9,000 in premium recovered, every week. Now that we do have some weeks, this month has been a real challenging time with Tesla, because it's been on a little bit of a pre-earnings run, and so got hit twice, but it was able to kind of go back in and do some trades to the downside once we'd gotten taken out on that. And that was one of the things that I'll be putting out to folks going forward. Is oftentimes what I find is where my stops are is right exactly, Murphy's Law, right exactly where it flip-flops and turns back around. So as of the 25th, we were sitting with about 25 more weeks to go with this particular trade. And what I will do, once this trade reaches to 100%, I will close out those long leap options, and then I'll do either one of 2 things. I will go out to 2018 and set up the same trade for 2018 and just start running it again with Tesla. As long as Tesla continues to put in the kind of patterns it puts in and maintain its level of premium on weekly options, we'll just keep collecting as we move along. Okay. Okay, here's a trade we set up back in September 22nd, which is right here. We know that there is a seasonality to gold, and so this was a straight seasonality trade. Basically, we took this trade, looking like it was going to bounce off the 20. It wound up bouncing off the 50. But what we did was we did a debit spread. We bought this spread, which was to buy the 122, sell the 127 call spread that expired 17 August. It was triggered on a bounce off the 20, entered at $1.49. That's how much this spread cost us. We bought 12 contracts, and then we basically split it where we'd sell a quarter of that at various areas. What happened was it gapped up, gold GLD gapped up, and so the premium, the theta, the time decay on our options didn't fall off very quickly because it happened so, this happened so quickly, reaction. So we wound up taking the first profit at $2.50, a 67% gain on 624, which is here. A little bit over a week later, then we hit T1, which is here, where we took off another 3 contracts at $3 for 108% gain. And then, as I was saying, I'm telling on myself. I was adjusting the trailing step to 250. I fat fingered the entry and closed 3 of the contracts at $2.85 for a 91% gain. So as it stands right now, my T3, I want to continue holding this all the way till August 17th. And with my objective, I will close this somewhere between, I want to close it somewhere between $4.50 and $4.80. I'm going to move up my trailing stop again to about $3. That way I will, this will be, definitely a profitable trade. And so our initial profit on this particular is about $1,194 for a gain of 89%. So really been enjoying this trade, and we'd be looking for more of the seasonality type trades as we move into other seasons. So for those who are also members of the Bay Area Moneymakers, we will be back at the San Jose Masonic. Myself and some others will be making presentations August, and that's the first Saturday in August at 9 o'clock in the morning. We'll continue on with our Wednesday training for the active trend traders premium group. This we're going to be talking about how to find strong stocks. I'm still working on these videos that we put out later. And again, during the month of August, the day of the Bay Area Moneymakers, my wife and I are taking off. We're going to drive cross country and see this some things that we've never seen before here in the United States. Looking forward to that. So just a reminder that the way the active trading system works is our objective is to clarify, simplify, multiply. We base it on the 5 pillars of active trend trading: what to trade, top quality IBD stocks and index ETFs, when to enter, when to exit, what strategy we're going to use, either to buy the stock, sell the stock, or go into some type of options trade, and what our expectations are. I'm a firm believer that you must have a strong system, and attached to it then just a few strategies that you're going to trade off of it. This is our strategy 1, this is our strategy 2, and this is our strategy 3. I'll leave this up for a second. These are what we offer with the active trend trading early warning alerts. You can review that. And these include text messages and email alerts when we enter trades on both of them. So that's all I have for today, folks. I'm ready for either questions and or to look at some stocks. We will see you next week. I'll still be here with my son and daughter-in-law and grandchildren through the end of next week. So any questions and or stocks you want to take a look at? Great choice, Barry. Okay, I just want to touch base with Tesla. I tell you, Elon Musk has been talking up Tesla a lot moving into earnings. As you're aware, they are opening their Giga plant up in Reno, Nevada, and so it is pushing, it is pushing higher. It still remains an excellent trading stock. Is it making any profits yet? No. But at the same time, there's still a high level of excitement around Tesla, much as there was around Apple back in the good old days. So let's take a look at ACIA. Okay, Barry. I have no idea where you bought this. There was a couple of good times. This has been on my list, but just looking for a good entry on it, Barry. I mean, there was an entry back here where you had this nice flag here come back down inside the Keltner channel to the, actually this is the gold one is the Keltner channel, which are really expanded, and the black and white is the 10% off of the 20-day moving average, the moving average envelope. You know, if you're up 30%, which probably means, let me see here. Oops. Da, 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 da. Let's see how where 30% is. Probably about there. Yep, it is. So you must have taken on this breakout of this highs here, approximately, which is up about 30%, about 37%. You know, is it giving you a reason to sell at this particular point? The answer to that is, you know, no, not really. You've got a couple of things, and I'll just highlight this, as you can draw your trend line across here, connect your latest lows, and as long as, now the one issue with this is a very steep trend line, and so it would not be surprising to see that broken to the downside. But since it is so steep, those tend to be not, it will tend to then consolidate and then move back up from there. Another thing you can take a excuse me, take a look at is how far is it extended. We come in here, we pop the fib retracement on it, and we can go from the, you know, we don't have a lot of highs and lows to talk at, but as you can see from that swing right there, the symmetry has it all the way up here at the 200 level. It's well above the 200%. What else did we see here, Barry? I mean, it has taken, I mean, yeah, Barry, it has taken off. It has not really come back down to strike the 8-day and certainly not the 20 since it took off. So it appears as if it's got a pretty good level of support down here at the 56.75 level. And so I'd look at what it would do around that level there, the 56.85, and or if you get a, you know, if it breaks the low of the high day, and then you get the next day a close, you know, another close below that, off of that 8-day moving average, may be a good time to take some profit off the table, or you can take a little bit of profit off the table now, and then it would allow you more flexibility, and then plan your next trade to be on any type of pullback. You would add that position back in. Does that help? Okay, cool. Let's take a look real quick at WOR. We put this out as a trade earlier this week. Had a nice move breaking up off of the 20-day moving average through the 8 with some increased volume, which we liked. Now basically we pop back up to the top of the Keltner channel. It's pulled back to the 8, and we'll see if this, you know, pulls back a little bit more. I'm excuse me. I'm looking at a 4%. You know, we entered this trade yesterday at 44.50, and we'll see if we get, you know, basically, oftentimes this little signal right here is a bullish type, you know, three bearish candles down. If it's then followed very quickly with another thrust up, that tells us we're in pretty good shape. We have not quite taken, it's close. We definitely have closed above these highs we had over here. So we have good weekly closes, and right now I'm looking at, you know, we can either take 4% from where we entered to the 44.50, which is about 42.78. or we can just take it if it drops this swing low right here at 43.54 by 50 cents or so. Just go ahead and let that take us out of the trade, and then wait for the rebound. Let's see what's going to happen. Okay, any more stocks, guys? IBB, sorry about that. Gary, IBB. Okay. This is one of those, will it or won't it this time? Is this the time it busts up through this resistance level at 290? Or is this a time it basically just reverts and pulls back into the back down to these lows? So Gary, how are you currently playing IBB? Yeah, Barry, on ICIA, waiting for a setup. Okay. Yeah, I mean, I see basically kind of two setups going on right now, and it depends. Okay, one is what's it doing from here to here? It's basically moving sideways. So there could be a, at this potential high, if we get a bearish candle, you may be looking at a nice setup to the downside. If the indexes weaken, that would be a potential trade. On the flip side of that is if we take out these past highs, it's already taken out this middle high here on a weekly basis, and so we know we've got some, let's just draw in that level of, we know you've got some support that's right from these past highs over here. Now I can see that better here. I will move that a little bit. So you've got so we've got some good support where it did the breakout here. The volume was at least at average as we're breaking out. And so if prices hold right there, and that this is the turnaround of the, this is the biotech ETF, I would be looking at pullback to the 8 or the 20, or the 20. Look out, it has really respected that 8-day, but in the past, is it going to get past this past symmetry where it basically, pushed up to this level of resistance and then pulled back? I mean, that's some, but at this point, we're not really getting any bearish candles to say that's what it wants to do. But I wouldn't be a buyer right where it's at. I would be waiting for that setup that looks, I just like the pullback setups, either pull back into either the 8, or if the 20 is going to come on up here, into the 20. What could also be another setup for us would be excuse me, let's do a fib extension here, back to that high, and pull back down. I'd like to see it. Look out! See a pull back to the to the 23% retracement area. This that would be an idea area to jump on that. We can throw in for just shins and grins. Let's throw in another fib retracement, but we'll turn this into a fib extension, and it is basically from here to here. That worked nicely. Let me get rid of that so it doesn't blind us. And as we pull this up, now that we, if you remember that setup that we were looking at last week or Wednesday night on the fibs, where it could basically fall back down below the 100% retracement line, and then if it moves back above it, that could be a trade entry. again, if we get a nice little pullback, even if it's just in between the 8 and the 20 at this 78.6 level, that also would be a potential area to get in. Let's see, Barry says, biotech's sector, it has broken out of the trend. And I'm also waiting to see if it folds. Yeah. And so, yeah, I agree. It may have already broken out. It did definitely break out of this resistance here. It's got another level of resistance over here from this past high. And I think if, let's see, that's reflective of this past high over here. And if we get past that one, then it's looking like it could move pretty nicely. From here to here, let's just give a quick look at this. Oh, come on. From here to here, on that breakout, let's extend that upward. And of course, probably have to go over here to the weekly chart. And as you see, that puts it right back up in that old resistance over here. But things don't tend to go straight up, so I would look for some, now that we have some reversals here, and if, I'll throw on one other thing, if the shorter term 8-week crosses the longer term 20-week, that would definitely be a positive sign, and then we'd be waiting for any type of pullback into for a potential entry into a trade, because we can get a pullback and then pop higher, pullback, pop higher. And but I agree, it looks like it's ready to turn around. So any last stocks, folks? I like that, guys. I'm gonna move this the IBB, I think, onto our my current watch list also, and I'll watch it with you guys. Okay. Excellent. So, okay, with that, guys, I'm going to call it a day. I'm going to go play with my grandkids, and also make sure and I did send out an alert on the Tesla to wait until next Tuesday or Thursday for a trade, and we also got into sold the SPY. I think the 217 calls against next week, and that did fill where we expected it to fill. So with that, I'm going to call it a day. Everybody have a great weekend. God bless everybody.